All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday, March 8th, 2023. And as always, before we get started, I'd like to remind you this is not financial advice, not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, everything looking good. Somebody let me know what's coming through loud and clear in the comments. What's up, Hex? Good to see you. Let's go ahead and jump right in. So obviously over the last couple of days, we saw Jay Powell speaking before Congress. And of course, it was the clown show that it always is. But we did get a couple pieces of important data from Powell. I mean, nothing surprising. But obviously, he already backed down completely off of the disinflation narrative, went from using the word disinflation 2,000 times in a single sitting to 0. So strangely enough, suddenly the deflation narrative, the entire reason that the markets were rallying, has poofed. So, yeah, that's a thing. Which is no surprise at all, obviously, because we know how markets work. Same way that inflation works, same way that anything works. It doesn't go straight up, it doesn't go straight down. The market breathes in, the market breathes out. And what we look for is the predominant trend to try to identify the probability that price action or whatever it is that we're looking at will continue in the direction of said trend, obviously favorably. So that being said, we had a long trend where we didn't have inflation. And now we likely have a long trend where we do have inflation. And along that trend, as long as it continues to rise or stay elevated, we're going to have various peaks and troughs. And the most important thing to pay attention to is, do we end up with higher highs and higher lows? Does it look like we're going to have sustained inflation that lasts for a long time? Or is it just going to suddenly poof all of a sudden and we're going to go into disinflation via Powell? I mean, I'm not saying that the Federal Reserve doesn't know what they're doing, but you may remember transitory. And then after transitory came the disinflation. And after the disinflation is going to come, the next narrative that tries to propel the markets higher. And, obviously we want to look at fundamentals. We want to look at technicals. And then we want to make our own educated decision, because the truth is the markets are basically just used to always going in one direction. So whenever that's not sure, that's the craziest time in the markets. The biggest time of chop, the biggest time of losses. People are going to be buying the dip, and then the dip lasts for months or weeks, years, whatever. Obviously not going to be a good situation for them. What's up, Hex? Good to see you. Digital Durwood in the house. Good evening to you as well. Loud and clear. Sounds good. Awesome. So let's jump in here. We're going to take a look at TNX really quick. So obviously we're at 3.975 right now, so almost back at 4. We're barely off of our cycle highs. And, we're seeing a little bit of weakness here short term, a couple red histograms exiting the bullish control zone. But the truth is, we're basically just cooling off, but going sideways. So, I mean, if this thing just suddenly falls out of bed, sure, and then maybe we can start talking about this as a lower high, and then we can start talking about a lower low and all that good stuff. But we're just not seeing that in the cards right now. And when we go out to these longer time frames, I mean, I know other people don't have the ability to switch between time frames longer than one day. So, there's not a lot that we can compare this to, because other people don't have access to this. This is like a super secret, highly paid membership plan access. We're able to access things like the weekly and monthly charts. Most people are not going to have that, okay? Obviously. So we are definitely the outlier here. So you should take what we look at on the longer time frames and really reflect on that. When we look at this weekly chart on TNX, the 10-year treasury yield, this is when we crossed into a bull market, a very strong bull market. That was across a 200 exponential and simple, 200 exponential cross on top of 200 simple, and both have a blue slope. The 8 and 21 have never even crossed down. Here on the way up from 0, we at least had a run up to the 200s and then a cross down while we retraced and then back test, and then we just banged our head a couple times on resistance before surging higher. We didn't even have that happen. This didn't even flip red on the weekly chart. So we weren't even, we were close. We were getting closer. There was a time when maybe it looked like we were going to cross down. Doesn't look that way now. We see these things are getting further and further away from each other. We're building momentum back towards this. And, again, it looks like a lot when you're on shorter time frames or when you talk about these big numbers. But, the highest weekly close we had so far was at 4.2. And we're at 4 right now. So we're 0.2 away from the cycle highs. Okie dokie. And we look at the monthly. I mean, we haven't crossed officially a bull trend yet, but the 200 exponential is on top. Good sign. The 200 simple is basically flat, very close to having a positive slope. And we are well above that level. So we could actually go through an entire Fed cutting cycle, cut all the way back down to like 2.5 or something like that, consolidate. It could take months or even years to go through this cycle in consolidation, and then eventually put in a floor and still maintain on top of the 200s. And all that does is just make this look like an even more confirmed breakout. But when I look at this chart and I say, okay, since 1987, we were doing one thing, and now we're doing the other thing. Everything that worked since the 1980s suddenly is not going to work anymore, but the market is still in denial about that. So part of what we're doing here, obviously we're more conservative. We're not buying insane, options that expire worthless. We're not, gambling with our accounts. We're not trying to hit a moonshot. We're not betting on the come rockets and whatnot. Okay, we're trying to preserve capital and grow that capital over time in a sustainable way that's repeatable. You're not going to do that with these options and, these crazy meme stocks and stuff like that. It's just not real life. I mean, you can get lucky. Sure, you can play the lottery. You get lucky. But if you win the lottery once, you don't just go back and say, oh, I'll just do that again. That was easy. It doesn't work like that. So very, very important that we pay attention to the actual trend. And the trend is on the monthly, very bullish and close to being the most bullish it's been in 40 years. I mean, it is already, honestly. The weekly is bullish. We're in a very, very strong bull trend. Very, very strong bull trend. So when I look at this daily and, people are calling for the big pullback and the rates are going to crash and unsustainable debt and the debt ceiling and the blah, 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 blah. None of it matters in my opinion. So, and we can make the exact opposite argument for TLT. I mean, this is 20-year treasury. This thing is getting absolutely hammered, clearly in a downtrend. Not even able to get a short-term 821 bull cross. We have one here, pathetic. We have one here, pathetic. We're trying to do another one off of a higher low because people are desperate for TLT to bottom. And on the daily, sure, it looks like we're going to have another push up here maybe or whatever. Let's go out to longer time frames just for perspective. This is the weekly chart. This is the 200 exponential and simple moving average. We went into a complete meltdown mode. And now people are trying to get bullish on this based on, the beginning of a little bit of momentum or something like that. When we switch out to this monthly chart, if you didn't tell me what this is, you didn't tell me this is treasury assets or something like that, and you tell me that for the first time ever in this chart's history, going back to 2000, over 20 years, we're now below the 200 exponential and simple. The 8 and 21 are powerfully angled to the downside. The 200 exponential and simple are either red or getting ready to flip red. And then you tell me this looks like a good buying opportunity? To me, it looks like you're trying to pick the bottom. And that's not what we're doing. I mean, we do it sometimes for like trades and scalps and stuff like that. But I'm not trying to pick the bottom of, what was a, 30 plus year uptrend in treasury markets, 40 arguably, after they've been selling off for like 2 years and saying, oh, they're a good deal now. Okay. Yeah, I'm sure there was absolutely nobody that's saying buy treasuries now that was saying buy treasuries here or here or here or here or here or here, or it's all different people now saying buy treasuries, because otherwise they're wrong the whole time and it's just been completely melting down, which is exactly what happened. I mean, there's still people out there talking about buy treasuries that have been getting absolutely wrecked, down 31% on what is supposed to be the safest investment in your portfolio. Okay. But I mean, somehow still have credibility, I guess. I don't know. Very strange. Yeah, I'm not interested in treasuries at all. Chart looks absolutely horrendous. But I mean, those are probably like the equivalent of the people that are saying like buy Chinese stocks that are in like complete meltdown because they bounce 100% off their lows, even though they're still down like 80% from their highs. Okay. See, we just are doing a different kind of quote unquote investing than those people are. So we look at the Dow Jones here. I mean, this thing is literally every chart. I mean, we've been basically hanging on to that neutral, could go bullish, could go bearish on various time frames. And I really don't like how it's developing. So this is the Dow on the daily. We're holding on to 200s for now. We're in between them. They're both technically blue, but this is just neutral. You know, and we've been in a long uptrend, and then we went in a long downtrend, and now we're trying to confirm back an uptrend, but it's neutral. We're at the neckline of what amounts to basically a double top. If we lose this area, we'll retest some of the lows and see where we find support at. If we hold this area long enough, everybody will get bullish. You know, fireworks will explode in the sky. People will come out of nowhere and just start rubbing your shoulders, making you feel good. They'll take your shoes off and put them in a hot bath, and just everybody can just enjoy living the king's life, and we'll go back to just everything going up all the time. But just in case that doesn't happen, we should probably prepare, keep our shoes on for now, and not get too comfortable. So when we look at the Dow Jones on the weekly, we bounced the 200s beautifully as expected. We shot up here at 821 bull cross, started looking good again, took out the previous high, and now we're losing that 821 bull cross. So it doesn't mean that we have to put in a new low. But what it means is if this flips red, which it's, 2 days away from doing, more likely than not, we're going to come back down here and retest these 200s again, potentially the lows, whatever the situation is. And then we can go from there. If we come down here, find support at a higher low, I'll be much more confident to take an entry on the Dow. Not just because it'll be down 9%, but because, it'll look like there's actually some kind of support. Right now, it looks like, the ice is about to break. We're jumping on it. And, everybody's just standing there all comfortable. When we look at the monthly, it's the same exact thing. We had the red cross right here. We had this massive save, attempt to save the trend. And now it's just bleeding back out. So to me, what this looks like is somebody, try to buy the dip. And we're talking about market makers, not, average Joe or whatever. Somebody tries to buy the dip. We break down from the levels. They pump the price back up. Distribution takes place. Once the distribution has taken place, they've exited their position knowing that they were wrong, but at, a break-even price or equivalent. Again, we're talking about market makers. And then after that, we break back down and then we can see what happens. Probably retest the lows or go to a new low. That seems very, very probable to me right now. We're losing the momentum. Everything just looks, gross. It really does. And I mean, it's pretty much the same across the indices. Basically like neutral trying to flip back into a bull trend on the SPY. We go out to the weekly and we're losing that little 821 cross. Barely got off the 200s. Looks like it's getting ready to roll back over and retest the lows. We go out to the monthly and it's the same thing. 821 bear cross. We try to save it, try to save it, try to save it. And now it's pretty obvious that it's failing. And now momentum is building to the downside and it looks like we're about to roll back over, retest the lows. And I mean, we can do this, 3 more times or 2 more times at the Qs, exact same thing. The Russell, exact same thing. So, all give or take a little bit, but basically just look the same. So we go out to the DXY and I'm going to do a long-term breakdown on the DXY because I think people just need that refresher on why not to buy into the hype of the dollar going to zero and America losing world reserve currency status and the BRICS nations taking over and all these brain dead idiots talking about all this stuff. DXY on the daily, back tested 200 exponential as discussed. 821 are still bullish. We're on our way to the 200 simple as predicted. Hard sell, exit the bullish control zone. Momentum still in our favor. Looks like it's just pushing up here. Dollar is notorious for faking people out, for tricking people, for squeezing people, for making them think they know what's happening, and then taking everything away. We have all green histograms. We have a hard buy. We've exited the bearish control zone on the weekly. We're back above the 8. We're back above the 21. And we're 2 days away from closing back above them and very close to getting the 821 cross. Could we run up here then and fail and roll back over? Sure. But the 200 exponentials on top of the 200 simple, everything looks pretty freaking bullish to me right now. And it looks like we're about to get continuation. Could that continuation lead to a lower high? Of course, we know that. And then on the monthly, again, we back tested 200 exponential. We back tested 200 exponential, higher low. We're on top of the 200 exponential and simple. Both have a blue slope. We have not seen that happen since we crossed into a bear market on the DXY since the 1985 breakdown. So we're seeing the same thing between DXY and yields. So there's, in my opinion, you know, if you're getting on the other side of this one, and keep in mind too, how long and how many times people have predicted the death of the dollar and how it's going to zero and it's trash and everything like that. And then think about the recency bias of that, okay? Because I want you to keep in mind, it is now 2023. In 2008, the DXY bottomed. In 2008, the DXY bottomed. I want you to really absorb that, okay? The Dixie bottomed 15 years ago, okay? 15 years ago, the DXY bottomed. Like 3 months ago, we were putting in highs. So for the last 15 years, anybody that's talking about the demise of the dollar, the death of the dollar, the end of the dollar, the BRICS nation, the gold-backed currency, the central bank digital currency, the rise of China, the rise of Russia, the BRICS nations, they're all wrong. They're provably wrong. The dollar is in an uptrend, and it has been for 15 years. Imagine being wrong for 15 years and just waking up every day and going, you know what? I'm sticking to my guns. Sure, it's been 15 years of me just getting kicked in the dick like the loser that I am, betting against the dollar like a brain dead moron. But you know what? This is going to be the month. This is going to be the month where the 15-year trend of the dollar getting stronger against relative currencies is going to end. Okay, sure. Wake me up in another 15 years, okay? And we'll see if you're right or wrong then. I mean, it's absolutely insane. Now, I'm not saying this isn't a macro top for now or permanently or whatever. What I am saying, though, this is how bull markets start, okay? And if you're not sure and you're like, well, let's see, we need to come back down and test the lows one more time just to make sure it's a bull market. We did it here in 2018. We did it again in 2021. So what do you want us to retest the 200 moving averages every 3 years to make sure we're in an uptrend? I mean, I guess I'll hold your hand through this process, but I mean, I'm not going to hold it for the next 15 years. It just absolutely blows my mind how brain dead people can be. I mean, to bet against something for 15 years. Matter of fact, anybody that's been betting against the dollar for the last 15 years is either broke or a liar. Because if they were actually betting against the dollar, they already lost all their money. So if they're saying the dollar is weak or it's going away or whatever, blah, 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 they're wrong. And they're broke. They already lost all their money, or they're a liar because they're not actually betting. And if they're not actually betting, who cares what they think? Because they're not even playing in the market. You know, that's like the guy, you're playing pool at a bar for money, and then some guy walks up and tells you like how to make the shot. You're like, bitch, you're not even playing the game. Get out of here, you bum. So anyway, bet against the dollar. Sure, go ahead. I don't care. But just know that after 15 years of being wrong, you're joining the team that has lost 15 years straight, always losing, forever losing. And you're joining that team right now while the dollar still looks strong. So, okay. Okie dokie. Have fun. Have fun being a loser. All right. So that being said, Tesla, I mean, topping out at the 200s, exactly like we discussed. We had a rip-roar riot on the way up, absolutely capitalized that, you know, bent the markets over, took everything they had to offer, and a couple things that they weren't quite ready to give up. And now, 821 bear cross, about to happen again. We got this gap right here. Do we come back down, close the gap, put in a higher low, and then Tesla can go higher? Sure, maybe. I mean, it's basically resetting the indicator oscillators right now. We're breaking down below the slope line, but it's not crazy to think that we end up closing this gap at like 145, have a disgusting, gross sell-off. Everyone hates Tesla again, talks about how trash it is, how Elon Musk got too much on his plate, he's a bum, and he's a traitor to woke politics, or whatever the cult says when things are going bad. And then, you know, suddenly we close that gap, and then all of a sudden we start going up again, buy the dip, and then everybody's back on the train. Sure, it's possible. It's possible. But in the meantime, let's wait, see where it flushes out. That's why it's so important to take profits and just not get impatient at your take profit levels. Because a lot of times, I mean, Tesla hung around here for a bit after we took profits. I mean, but this was it. This was the trade. The trade was always and is always still. It was the touch of the 0.5, the back test of the 382, the breakout of the channel, and then the retest of the 200 exponential and simple. Remember down here, Tesla was going to zero because it broke down from the channel and everybody hated it. But what did we really do? We just hit the measure move of the bigger descending channel, exactly the 0.5 fib, all that stuff. You know, it was so obvious. You know, of course, to everybody else, it's obvious in hindsight. To us, it's obvious in advance. Microsoft trying to hold on to the 200s doesn't look particularly great. You know, we're just basically, tech is trying to like run away, but there's no real momentum or anything. Apple pushed up here, topping candle, back on top of the 200s, looks okay. Google had a nice little run back up to the heart line of the channel, back above the 821. Still looks very, very weak relative. Meta, you know, came back up to where that short entry would have been, trying to like run away, trying to do like the Nvidia or whatever. But the truth is, nothing has changed. Everybody that thought it was trash on the way down knows that it's still trash. Nothing has changed. Amazon, I mean, still just doing the same thing, just consolidating between these levels. We talked about this exact situation playing out, where essentially we get the green histogram comes up, bangs its head on the slope line, gets rejected. We don't know if it's going to happen, but we'll wait and see. I expect something like that along those lines. Yeah, I'm just not buying this whole, like, everything's good now, tech's going to go on forever, like, rally. It literally makes no sense. I mean, it made sense when everybody thought the disinflation and the pivot and all that good stuff. Sure, you can go ahead, front run the markets or whatever. But then after that evaporates, after the Fed comes out and, you know, puts a you know, bullet in the chamber and executes any thought that the market had of, you know, the pivot or the disinflation or anything like that. After that shot's been fired, I mean, market's really not responding in the same way that it should. So we know that at some point in time it's going to come back into like reality. Stuff like Nvidia still running away to the upside above the 618, potentially going back to the 786. Yeah, I guess it's just a bull market. Everything's good now. So we don't have to worry about technical analysis or anything. We just buy and hold. We just hodl again. Hey, we did it, guys. We made it. Another bull market. Let's just hodl. All right, let's look at Bitcoin. All right, so Bitcoin on the daily. So we did it. We came back down to 200 exponential, came up here, put in a high, printed disgusting bearish divergence that would be obvious to, you know, a child, possibly even an intelligent pet. Yeah, so very, very clearly, double top, bearish divergence. We're at the neckline. We're at the 200 exponential. We broke down below it and immediately flipped red. Doesn't really matter. I mean, it's flat. So is the 200 simple. They're both just flat. So we're fighting to maintain those levels. If we're above them for long enough, bull market starts. If not, you know, we retest the 200 simple. If that doesn't hold, start retesting some of the key supports and the lows or whatever. Looks very, very clear to me like a double top right here. Very, very clear. Now, does it have to play out or could we go higher? We could definitely go higher. We had all this time, 1 day, 2 days, 3 days, 4 days, 5 days, 6 days. And now here we are, day 7 of people buying support if they want to buy it. We're not seeing any volume come in. We're not seeing price action correspond at all. Could we see something like this where we basically get one rejection of lower prices, one decent buying candle, and then we just go, you know, big candle up? Sure, it's always possible. But the big difference for me is here we were still relatively close. The 821 cross was like still pretty tight. It was tight like a toiga. So it was easy to cross back to the upside. Here we don't have that same situation. We're not just going to pop back above it and then it immediately bull crosses. All the bots, all the algos, you know, all the crackhead retail traders just jump back in. It's not going to happen like that. It's going to take days or weeks to cross the 821 back to the upside. And in the meantime, we have bearish divergence playing out. So for me, 100% for me personally, and obviously don't listen to this. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly, or you will end up living in a van down by the river. But for me, the obvious target seems to be the 200 simple, right? I mean, 19,721. $6.98. I mean, if you want to be exact about it. That's the obvious target, I would say. Bearish control zone, bears are in control. All red histograms, below the zero line, red slope line. I mean, everything pointing to the downside. So sure, maybe we get a little pop in the meantime, couple percent back up. But the inevitable target seems to be a retest to the downside. When we look at the weekly, been above the 200s forever. We break down below them. We test them. We back test them. 821 bear cross continuation. We get the 821 bull cross. Everyone gets excited. Obviously, we anticipated that move ahead of time. We predicted the hard buy, the bullish divergence, the blue slope line, the multiple green histograms, the back test of 200 exponential and simple. Predicted it ahead of time. You go back, you watch the videos. We called it literally to a T, and it played out perfectly. So that trade is done now. So we're not just going to sit here and just hope and wish that it just goes higher and all the work is done and we just bought the exact bottom and now it's new bull market. No, we take profits at resistance and then we let it flush out and wait for the next trade. And right now, very clearly, when we look at this, again, it looks like a double top, a back test of the 200s, a rejection of said 200s. We lost the 8 and now we're retesting the 21. 2 days from now, we'll be at the 21. So maybe we push back up again, try to push back to the upside. But I mean, to me, this looks like a clear rejection off of resistance. And then we're going to wait and see where do we find support. If it's a higher low, it looks good. If it's a lower low, it does not look good. So right now, I don't think we're going to necessarily go back down here all the way and revisit the lows. But I think the market's going to test those lows and see where the buyers are at. You know, and when we only have 2 candles like this on a weekly time frame holding us up, you know, we're a couple dollars away from wiping out this candle. And then at that point in time, you know, we had one big candle down. We had one big candle up. So there's no real price action in this level. So again, we have another one of those air pockets where, you know, if we start to come back down to those levels, it's easy when you hit an air pocket to just drop to the bottom of the pocket. And that puts us back down here at like 17,300. So all the people that are levered up, all the people that are late to the party, all the people that went all in or FOMO'd, all the people that took equity out of their houses, you know, and put that money into the crypto markets or the stock markets or whatever. Have fun staying poor. Monthly chart looks terrible. Looks absolutely terrible. I mean, I get it. A couple green histograms in a row. You know, we're in the bearish control zone. We got the knife on top of the Stochs. The blue Stochs starting to turn up. Like, I get it. There's some signs that, you know, we're not melting down, going straight to zero. So that's good. But I mean, it looks like we backtested that 8. Got rejected, and now, you know, we're going to retest the lows. So, I mean, it's not like super scientific like stuff going on here. We basically tried to go lower. It didn't happen. So we went higher, and then we went as high as we could, and then we couldn't go anymore. So now we're going to go back. I mean, that's just all the market does. Feels it out until eventually something breaks in one direction or the other. So for me right now, there's too much just pointing to the downside. And, you know, if the real question is, well, you know, what if I want to bet on a new cycle high or a new, well, it's not really cycle, a new, you know, rally high or whatever, 15% upside versus a backtest of 200 simple, 8% downside. So, I mean, technically almost 2-to-1 upside risk reward. You know, but we don't have like a clear trend or whatever. I guess that could be the trade setup. But I mean, realistically, you know, everybody that was trying to buy the 200 exponential bought it back here. And then we pushed up. And then that rally failed. So I don't expect like a bunch of people to like step back in and now be like, oh, thank God, a second chance to buy the 200 exponential. I think more likely than not, the people that bought it right here and it ran up and then they gave it all back are probably going to be looking to sell into it in case we break down lower and then try to buy the 200 simple. At least that's what I'm going to do. Futures charts, we do have to be careful on the futures chart. Obviously, it's pretty gross. Back tested 200 exponential and simple, double top, couldn't get above it, and now we're on our way back to 200 simple. In this case, it's 20,900. If we do get down to the 200 simple on the futures chart, we're basically at that gap fill, which means we have an air pocket down to 19,550. So it seems, again, like the obvious target. I mean, the moving averages are just like gaps in the sense that they act like magnets. They either suck you towards them to close the gap or, you know, tag the moving average, or they push you away from them, rather. So again, same bearish divergence, slope line flipping red, hard sell signal. It just looks gross. There's just nothing good about how these charts look right now. If you showed me what a chart's supposed to look like when it's going back into a bull market, and then you asked me to draw what it looks like when one fails. This is the chart that I draw. We get back up to the 200s, we get back on top of them, we start to flip them blue, and then we lose that area. We come down, retest the 200 simple, come back up, put in a lower high, break down below the 200 simple, come down here, try to find a low somewhere else. I mean, that's just how price action develops and then fails. Ethereum, same thing, consolidating above these levels, putting in basically a double top, the breakdown measure move, take us some back down here to like 1,320. And we got the Raoul Pauls of the world talking about the next bull market and how Solana is going to be the next big thing and Ethereum's supply and it's going to go offline and just don't be surprised if it goes into a massive bubble and blah, 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 blah. Blah, blah, blah. So total market cap on the weekly looks like it's getting rejected off the 200s, rolling over exactly like Bitcoin. Looks like complete trash. Bitcoin dominance. We were seeing some weakness in Bitcoin dominance relative lately. Now this one is everything Bitcoin dominance with stablecoins and altcoins. Still above the 821, but last few weeks here, we saw a little weakness. But again, still above those levels, still bullish control zone, still momentum in our favor. Looks like Bitcoin is going to continue taking away from stablecoins and altcoins. We go to Bitcoin dominance and we remove the stablecoins from the picture. Bitcoin is actually gaining more momentum relative to them. So it tells us that people are still moving money from safety of stablecoins into crypto, into Bitcoin or into altcoins. But when we remove that part of the puzzle and try to get a clearer picture, we see that Bitcoin is still gaining relative to altcoins. And we know historically when altcoins are strong compared to Bitcoin, we're in a bull market. When Bitcoin is strong compared to altcoins, we're in a bear market. So looks like we're going to see continuation of the bear market. If we take out the recent relative high at like 51%, probably going to retest like 56%. So that means Bitcoin is going to take an additional 10%, of the 50. So 55. You know what I mean? From trash coins. Altcoins. Matic is next. This was one of the strongest cryptos and it is now retested in 200 exponential. This would be the first buy on the retest of a 200 exponential. It is pretty beat up, so maybe something like this is getting ready to set up for a little bit of a rally. Basic attention token melting down after a nice rally. BNB, this is the one, everybody's talking about Tether and the Tether implosion and waiting on that. And, the Tether implosion is like too obvious. And just like the demise of the dollar, people have been calling for it since like the beginning of time. Okay. Like you can go back and find like ancient tablets from Moses talking about how like the dollar is going to zero. Okay. The same way you can find on like the back of Satoshi's white paper that it says like Tether is a Ponzi scheme and it's going to zero. But it just never does. So let's not focus on Tether. Let's focus on the thing nobody talks about, which is BNB. And BNB is losing the 200 exponential and simple now. Obviously, there's no liquidity on, Binance Chain US, or rather Binance Exchange US. And that's why we see these like ridiculously gross wick. But I mean, let's not just assume that this wick is nothing. Somebody sold into this. Like, I'm sure it wasn't just like some fat nerd that just accidentally hit like the hard sell everything button. It was probably just lack of liquidity and somebody trying to sell into it and not realizing they were going to clean the books out. Or maybe it's intentional. I don't know. But regardless, if we lose the 200 exponential and simple, there's not much holding this thing up. And then we get, we always talk about air pockets. This is the biggest air pocket known to man, which is the drop from where we're at right now at 289 down to like 209 and then down to $40. So is this enough to drag it down? Is the largest Bitcoin exchange or crypto exchange on planet Earth, completely imploding price action wise, enough to bring down price action on Bitcoin or the crypto space as a whole? No, it's probably fine. I'm sure everything's fine. There's no danger here. All right, so gold. Gold obviously had a nice little rally back to the top of the channel. Here it is at the 200 exponential. We bounced it once. We came back down to it again. Seems more likely than that. We're coming to the heartline, the 200 simple, all that good stuff, which puts us at like 1775, which has been our target the whole way down. So, sure. Silver melting down, sub $20 again. Remember here at the top of the channel at $24, it was $30, it was $50, it was gazillion dollars, and now at $19 an ounce. They have officially retired aluminum. They're no longer using it to make cans anymore. They're just going to make them out of the trash metal silver instead, which is good because then when the homeless people gather up the cans, they could take them in and like change in their silver cans, and they'll get slightly more than they were getting for aluminum. It's not much. I think it was like 5 cents for an aluminum can, and I believe they're going to be able to get 6 cents for a silver can. So it's 20%. It covers inflation theoretically, right? So that's good. But yeah, I mean, silver just looked like complete trash, running into the same resistance line it's ran into for I don't know, since like 2011 roughly. So I mean, can't get above this level. Complete meltdown. Probably going to retest the lows again. I mean, it looks terrible. It looks absolutely terrible. And every time silver pumps, people get super hyped, and it's like, this is it. This is going to be the one. And then the same thing happens over and over again. I mean, talk about some warriors. To be an investor / speculator in silver and still be like an optimist is amazing. And then like the strongest argument for like people when they're in some trash asset that's like complete garbage and just melting down and makes no money and all you ever do is like destroy wealth, their like biggest argument is like, I mean, look at the sentiment though. This is what I want. Like the sentiment is bad because it's a loser investment. Like that's why the sentiment is bad. So you're like, sure, silver is hated right now and the sentiment is terrible because if you were in it for the last few years, everything else went parabolic and it didn't. So yes, the sentiment is bad. So we talked about Caterpillar, we talked about Deere, the industrials, we talked about UNH, breaking down to new lows. Seems more likely than not we're going to visit the pandemic Rona lows, but realistically the 236 is the target at 431. And seeing as how this is like a kind of important stock, like if you've ever heard of the Dow Jones or anything like that, probably going to matter if this thing starts breaking down to new lows. Actually, that's not pandemic lows though. That was the June 22nd lows. So we'll see. So GSG, same thing, still consolidating that level. Still looks like it's going lower. I mean, not much has really happened recently. Basically, everything that like pumped started giving it back a little bit. Everything that went down just kind of hung out. LNG, not much going on over here. Shell, same thing, not much going on over here. Looking like that bearish divergence double top we discussed. Mosaic pushed up here. We talked about how this was probably the top last time. We came up to the 618, got rejected, came lower, retested the lows. Here we came up to a 0.5, got rejected. We're retesting the 382 for now. Not crazy to think we're headed down to 236. If that doesn't hold, oh look, we'll just continue building this giant, descending triangle. Sometimes it's not pretty because this was our resistance. This was our resistance. We broke out. Everything's good. But the truth is, it doesn't matter how you look at this. This is how you trick people. Okay. If I want to trick people, what I do is I trick them into thinking this is the pattern. And then we break out of that pattern. They buy in. They provide liquidity. Okay. I trick them into being buyers so that I can sell. And then in all actuality, what is the pattern really? I mean, realistically, are we not still just in a descending triangle? It just is like a little bit different. I mean, that's what I see when I look at this. Oops, I'm trying to like turn this red so it sticks out a little bit more. I mean, this is our descending triangle very clearly. And then it's like, no, we broke out. Everything's good now. And it's like, but isn't it still just a descending triangle? I mean, the slope is not as intense to the downside. Here it's like pretty intense. Here it's like less intense, but still to the downside. But I mean, are we still descending triangle? 100%. It's 100% still a descending triangle. So as far as I'm concerned, nothing has really changed. But the perception is that we broke out of the descending triangle. But as long as we're putting in another lower high at a key fib level with, a flat bottom support, I mean, it's just a descending triangle still. Pot stocks breaking to new lows, trying to get to zero. I mean, it's hard, but they're definitely trying. So URA, so we've been talking about uranium, obviously, same exact thing. They built a strong case for silver. They built a strong case for uranium. They built a strong, case for whatever other trash asset is out there. And I don't mean like trash as in like uranium's not like good. I mean like trash like chart wise. So that being said, uranium charts look like this. It's just a big like consolidation pattern. We had a nice run to the upside. We're consolidating lower. We have clear resistance in red on top, clear, support on the bottom here in blue. Using this little 5-wave structure, you can see that green resistance line is forming basically a resistance. We break through that, and then we get to our red resistance line, which holds. And now we're coming back down, back testing, ascending white support and descending green resistance. So right around this area, we would expect some temporary support. But really, we're just kind of squeezing into this like symmetrical triangle. So, I mean, could we just keep squeezing in the triangle until July of 2023 and then eventually get a break in one direction or the other? Sure. I mean, we're getting close to the tip right here, but I mean, realistically, when I look at this, I say, okay, we just do this for a little bit longer and then eventually we break out. So we either break to the upside or we break to the downside. Well, which one is more probable? I mean, we can maybe give like a little bit of priority to the upside because we're in like, bull trend on the way up here. But realistically, just breaking through this support right here, we're still respecting the resistance and still respecting the actual like support that matters. So I think more likely than not, we're probably going to head back down here to the lows, put in new lows potentially even. And that's what I think for the uranium space. And, all this money has just been trapped and stays trapped and will likely continue to stay trapped. And that's part of the problem with what's happening right now worldwide is, part of the problem with rates being so low for so long is, think about all the demand that got pulled forward, because that's what it is. If you borrow money, it makes perfect sense to a child, but for some reason adults don't understand how it works. If you borrow money, who are you really borrowing it from? Like, sure, there's a creditor and you're the debtor, but you're really just borrowing from yourself in the future. Okay, because you just don't have the money now, so you're going to work extra in the future to get that money. Well, you could just work extra now and get that money, but for whatever reason you can't or you don't feel like it. Sure. So all you're doing is borrowing or pulling demand forward from the future, because if in the future you have borrowed, $1 million and now you have $100,000 a year payment that you have to repay, that's $100,000 less per year that you get to consume stuff with. So you're really just borrowing from yourself, and there's just somebody on the hook in case you can't pay that. But that's really all it is. So when we look at all this stuff and we really look at, what's happening in the housing market or what's happening in all these assets, like people are basically just trapped in their investments or their speculations or whatever. So it removes liquidity from the system. Now, there could be events that cause people to force selling or make people decide to sell or, buy, whatever the situation is. But as long as your house is financed at a rate substantially lower than the market rate, unless you can sell your house including your mortgage, to somebody else, or I'm sorry, the other way around, sell your house, but keep your mortgage, percentage, you have an incentive now not to sell your house. Because if your current payment is $1,500 a month, you sell your house, you buy an equal price house, but the rates are twice as high, instead of paying $1,600 a month, now you're paying $2,400 a month. So that house better be worth an extra $800 a month to you, or you're just not going to move. So you have to get a substantially better deal on the actual house. So if we assume your payment has gone up 50% because rates have doubled or somewhere around there, you better be able to get, a way better house for a lot cheaper, or the same house for half the price, or some kind of like, give and take of that, or you're just not going to move. And that's the problem. We pulled forward a ton of demand in the housing market and, refis and mortgages and underwriters, and created all this extra business, but it's not really extra. It's just pulled forward from the future. Like, how many people bought a house that were going to buy a house in the next 10 years, and now because they bought that house are not going to buy another house in the next 10 years, specifically because, they refinanced or got a really low mortgage rate. I mean, nobody ever talks about any of this stuff, but the truth is, we borrow and borrow and borrow until there's nothing left. And when people talk about like defaulting on the debt or whatever, you're basically just getting to the point where you're just fully enslaved to your debt burden without ever getting ahead, which is how a lot of people end up, making payments, but never paying down the principal. And that's the whole like thought process of why everybody's scared about the debt ceiling and what's going to happen in the US or to all these countries because the debt is so large compared to GDP and blah, 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 blah. Don't worry about the United States government defaulting. Worry about the people in the world defaulting because they don't have a money printer. Okay? Central banks have a money printer. They might default by devaluing your money, aka using inflation. Wait a minute. But they're not going to just not pay their bills. It's just not going to happen. But what do I know? I'm sure it'll just happen. This will be the one time that's different. I'm sure. Because like central banks are going to like get a virus and like their money printer goes offline and they're not able to create the dollars. That's it. That's what's going to happen. Neo trash, breaking out of lows, losing billions of dollars. Bob hanging out the 236. Potential for this inverted head and shoulders. Don't want to get too excited. Try to cross into a bull market. Everybody got excited. China reopening, blah, blah, blah. We're back down below 200s. They're red again. We're barely hanging on to 236. If we lose the 236, I mean, don't be surprised if we're back down here revisiting the lows soon. And people are like, I don't get it. Oh yeah, I'm gonna do a breakdown on man, I don't really want to talk about these like a ton because they're just so speculative. But I want to talk about these AI stocks a little bit and just a sort of like warning. But yeah, we're not going to do it today. We'll do it in a static video separately. So yeah, I didn't have a ton ready to go for today. I'm not going to lie. I have been under the weather all week and still not feeling particularly great. So I probably picked up a little case of the old, definitely not genetically engineered in a lab virus. I mean, it was probably just a regular cold, not one that was designed and funded by, various governments and, little people that look like elves. Definitely not funded by them. All right, sweet. So we did it 47 minutes, pretty quick. Probably going to go ahead and wrap it up there, guys. Honestly, I have just been feeling like trash all week long. So appreciate everybody tuning in today. Hopefully you guys enjoyed the stream. Remember, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. It is March 8th, 2023 at 8:50 p.m. Eastern Standard Time. I am, of course, Crypto Trend Trader. And I'm getting the hell out of here. Yeah, I'm already feeling a lot better, man. I mean, going to the gym has helped a lot. Like, I feel trash going there and don't feel like doing it. But then by the time you get done with a nice workout and build up a nice sweat and everything, you're like sleeping good at night and everything. But I'm pretty sure it was like, flu or flu equivalent by another name, whatever. Because like I felt like complete trash. I mean, my body was sore, muscles aching and all that. And then the next day it was like headache and dehydrated. And then it's just slowly been like getting a little bit better. So I'm hoping by tomorrow I'm feeling much closer to tip-top shape. But don't you worry. I do appreciate it though. But yeah, we're going to wrap it up there. So that's our midweek market update. I'll be a little more active in the group, hopefully, when I'm not feeling like trash. And we'll have some more static videos out there for you guys. Honestly, right now, though, it's not like I'm not watching the charts or anything. There's not a ton happening right now. And the market is basically deciding, like, hey, we already came a long way. There's not really any, like, good deals anymore. And now, suddenly, like, the fundamental case that the market built for the rally is evaporating quickly. We'll get some more data in the next couple weeks. And then Powell's going to be right back out there again doing his thing. So, I mean, basically, just don't even look at the charts. Just follow what Jerome Powell says. And because that's all that matters anymore. Nobody cares about anything but what Jerome Powell says. Which further reinforces what I have said literally for years at this point in time. That Jerome Powell is actually the most powerful man on earth. And probably the second most powerful man is Elon Musk. Because, when the two of them speak, everyone listens. They literally move markets. Point to anyone else on planet Earth that has the ability to move markets like Jerome Powell and the on the side Elon or whatever. I can't remember what his title is. The Twitter CEO or whatever it is. We'll just call him the Omnissiah for short. So I don't know. I mean, two most important, most powerful, probably some of the richest people on earth. Yeah. So, all right, everybody have a good night. Appreciate you guys tuning in. Hopefully you enjoyed the stream. Sorry it's so quick today.